right, we are recording. It is 7:17, 9:12 p.m. and we're going to be going over strategy on Pathfinder. So let's go ahead and break down what we are looking for, and then we're going to dive into it. So I think to begin, we're going to talk about the 1 minute time frame first. I think we'll start on the 1 minute time frame. Okay. On the 1 minute time frame, it's very simple. Okay. When you are above your easy money line, you're buying. When you're below the easy money line, you're selling. Okay? Just like this. Okay? And then the market will go sideways at some point. Okay? So you have areas of expansion, and then you have areas of consolidation. And the market consolidated for a very long time today, as you can see. There was a lot. This was all consolidation. This entire time frame in here was all consolidation. It was brutal. But in here, the market moved. Okay? So let's see if there were any entries here on the 1 minute. Where I prefer to enter on the 1 minute is when you have bright coloration. Number one, bright candles. Okay? So we have our direction, we have bright candles. Okay, so that could be here. These are bright candles, clearly going up. It's above the easy money line, right? We have what's called the easy money line. So let's get this here. Easy money line. Okay. So that easy money line is like the directional line. Okay. 1 second. Easy money line is like your directional line. If you're above it, you're buying. If you're below it, you're selling, in short. And that's the basics of it, okay? So an example of an entry on the 1 minute would be here. We have, number one, bright candles. Number two, we have strength. And we'll break this down as well on the 15 second after this, but for the 1 minute, I'm going to show you guys first. So we have bright candles, we have strength, okay, on this particular candle. I see bright candles, and here we see that the market had almost hit our aqua line here on the PSI, which shows us strength, right? Back over here, we see that, we see hitting the aqua line right here, and we see strength, which shows up in the form of diamonds, okay? Now, when we enter, we really only want to enter for sure on pullbacks, but you want to see wicks. Wicks are really, really important, okay? So wicks are some of the most important things you're going to see on this, on the 1 minute especially. For example, there were 1 minute trades in here where you could have taken it on these wick pullbacks, these little wicks, and you can see there's support there. Now, that move's not as great, but on this particular move, you can see here to the downside, there was an entry right here where the market was red. We see diamonds, we see dropping. We've got bright candles, which is momentum, right? Momentum. Let me get this. This is diamonds, so strength. Really, it's the PSI. You want to see those upper and lower bounds being pushed, okay? But you can see that it's bright blue there as well. So we see the market is, we see it's on the move both here and here. So right here we have a trade where the market pushes up above the red line while it's bright red. When that happens, that is your entry. So when the market is bright red, pushes up above the bright red line, you're looking for the sell, you're going to take your sell here on this candle up here. Okay? You don't even have to wait for it if you don't want to wait for it. You can take it immediately because most of the time you're going to get the wick. You're going to get this. And then instead of being in down here, you could be in up here. You know that if it closes over it, you know that you're getting out. So if it pushes up in here, you're not going to go that much farther to where your stop loss is going to be. All right, now if you were to put a short position on this, if you were to enter in from here, well, it's bright red and pushing down, you could see here that you could take a 1 to 3 to where that diamond is. You could see that it pushed all the way down here. So if your stop loss was anywhere in here, you would have been just fine with a great risk-to-reward ratio trade that pushed down. But chances are you're taking profit on that. When you see that diamond, you're probably getting out on that one or the candle afterwards. So you have a trade right here on the 1 minute, okay? So you have wicks / easy money line, okay? Your easy money line you want to enter when the market is above the easy money line for the sells, below the easy money line for the buys. You don't really want to enter anywhere in between necessarily. Otherwise, you're just scalping and you're just taking quick buys because you don't know when you're getting to the pullback zones, right? The easy money line is a fast-paced line that when you dip below it or you dip above it, that's where you're looking to hit. And it runs pretty close most of the time. Okay? So this is an example of a sell right there. This is an example of a buy right here where you have bright blue, dips below, and you could buy immediately on the 1 minute, especially if you have an FVG like this and it approaches that FVG, you can hit it. You can see we already had buyers right here. Comes into that wicking zone right there and immediately turns around and goes the other direction. Okay? So you had an entry there. You also had an entry here, which you could have taken up for the equal high. You could have also taken this one up for the equal high. And this is on the 1 minute. These are not small moves. That is 60, 70 ticks in the market right there. That is a huge move in the market. It's a big move. Okay? So on the 1 minute, this is a very, very simple way to do it. Now, I want to even simplify this third step for you. When you have the bright candles, you have strength on the PSI, you have crossing the easy money line while bright. Okay? It's very simple. This is the 1 minute. I'm going to mark this up as the 1 minute strategy. This is your entry. Okay. Higher high / lower low is your exit. So as soon as this makes the lower low, you're looking to get some profit. As soon as this makes those higher highs, you're looking to get the profit. And that got way too big, way too fast. So 1 second. There we go. Okay? Just like that. All right, I'm going to screenshot this. This is your 1 minute strategy. This is very simple. I literally would not need to teach you anything else. And if you just take that in its simplicity, you'll be able to go and make money on the 1 minute. All right? It's quite literally that simple. 1 minute strategy. Boom, got that posted. All right, let's dive in now to the into the 15-second strategy. Okay, so that's the 1 minute. Very, very simple. Breaking it down to the 15 seconds on the same zone here. Let's go to the same zone. Now let's break it down to 15 seconds. All right, you can see those areas of entry on the 1 minute where it gave those pushes, right? You can see what happened after that, what it looks like on the 15-second now. So the 15-second, what we look for is the same thing. we see the market here is dropping. We have bright colors on our easy money line and our candles. And when the market is bright colors and comes up over the easy money line, this is where you're going to be entering. And when this happens, you're going to be looking for wicks and fair value gaps. Okay, now it doesn't always give you a fair value gap, like in this scenario. It just pushes down, right? Pushes down. Your target is the lower low. So you have bright colors, pushes up over the easy money line, entry here, especially when you see the wick. That's entry, and you take it to the lower low. Very simple. Okay? This one right here, this is bright colored, pushes over, but it becomes what? The 1 minute pullback. That was the 1 minute pullback trade right there. That ugly purple candle that looks like it's dead. Why? This is the 9:30. So this was market open. This is where volatility came in. You would not take this trade ever right there, by the way, because of the volatility. So here we see the market begin to move again. You can see the push over the red, over the bright red right in here. This is where you would be looking to enter. Okay, especially if you see that wick. That's where you're looking to enter. Market comes down, gives you the equal low. You're looking to take the exit on the trade when that happens. Okay. This market then turns around. Now we're bright blue. When the market dips below, bright blue, you're looking to enter right there. Same thing, bright blue, you're looking to enter. This had already given profit right here at the equal high. So you're only taking this not very far. You're just taking it to an equal high on the buys, equal low on the sells. Okay. Right here again. And you could have hit this a third time. Right there again. Now same thing. Comes back to the easy money line. This one does not cross it, but it comes to it. This one does cross it right here. This is a pretty solid cross. Let's see how this one works out. Just fine. This market comes back up, pops itself up. There's the 1 minute trade right there. Let's not confuse ourselves. Now you can see here already, look how many trades there were on the 15-second versus the 1 minute. The 1 minute gave 2 trades, okay? Although they were bigger trades, the 15-second gave 6 trades over 1, 2, 3, 4, 5, 6, but they're smaller trades. You're in and out of the market rather quickly on the 15-second time frame unless you're holding to see if you can get bigger moves. If you do that, you're going to get stopped out more. But you'll also hit these bigger moves in the market. So this market continues. Here we go. This is a bright blue dip. So it's nice and bright blue, dips below. And this one drops off. So did this give us an equal high? It did come push back up into here, up into these wick levels, but it never quite gave an equal high. It came pretty close before dipping back down. Once you see these levels break here where it's dipped below and then comes back up, it usually means something is going awry with the market. Like something's not quite right in the market once that happens. You can see the same thing over here once the market broke those initial levels of pullback over the line on the 15-second. You can see it reverse. Same thing here. It broke it, came back up, gave that red square, which I believe I don't know if we took that one, but I think we took this trade. We actually took the reversal trade here and took that one down in the market. And then this is where the market started to do other things for the day, but you can see here as it's bright red, popping above. So it didn't really go bright red until right here. Once it went bright red right here, you had several entries in the market where it was bright red, popping above the line until it gets broken. And that's what it looks like. So on the 15-second, it's the same thing. You have bright candles, 15-second strategy. Bright candles, momentum, PSI, strength, that comes in the form of diamonds, right? Crossing the easy money line while bright is your entry, okay? This is where you look for wicks. Watch for wicks, FVGs, and pivots for entry on that. Okay, and then the higher high and the lower low is your exit. I'm going to screenshot this so you're able to see, including what the losing trade looks like. So you can see all that. And we'll post that here. Good, so you guys can see those pictures. There'll be you'll have availability for these in school. Okay, before I continue, questions. Let's go into questions. Before we continue, I'm going to come over and look at the chat in Discord. I don't know if you have the latest one then. I'm not sure if you have the latest one. Because you should see diamonds and you should see the easy money line. So the one, oh, you have Pathfinder naked. That's why you need the actual Pathfinder. You need the actual Pathfinder. Right here. Copy the publication link and post it in Discord right here for you. Okay, there's Pathfinder, and I'm also going to post the PSI. And I miss it. I haven't coded anything in a week now. Day without coding is like a day without sunshine. My goodness. Haven't needed to. Things are getting so ironed out with this that it's like we're kind of like arriving at a moment here with this. It's fantastic. By the way, I'll turn my camera on here for a moment, say hi to you guys. Yeah, so I've been missing the morning trading sessions, but today again was a reminder for me of like, hey, we show up for an hour, we don't go past that. Like we're here for an hour, hour and a half tops, and then we're done. No matter what, whether you're ahead or behind or what, doesn't matter. Just got to stop at that hour and a half. So it was good. It was a good reminder of that. Like you got to take what you can get, focus in that session, and if you don't get it, you don't get it. And then everything becomes about just dialing in on that edge. Like you just sharpen that thing and dial in on that edge. That's the whole thing. Okay, cool. So you guys are good with that. We went over 1 minute. Let's go over every single 1 minute entry that there possibly was today. All right, let's look at every single one. All right, let's look at every single entry possible today. This was at 9:30. We would not have touched that. Would not have touched it. That's ugly as all get out. Look at all this structure here. I don't think we'd want to be selling into that personally. 1 minute right here, nice dip. And right here, nice dip. Right here, nice dip below. Nice dip below. You can see those became the pivot levels. Right here, dip below while bright blue. This one dipped below while bright blue as well, and you can see it went sideways. It held this level and ended up pushing eventually. Here, this held. This pushed a little bit lower. Then it went into sideways town forever. This is where the market ranged out. So nothing here at all. It did go back to bright blue right here. Did go back to bright blue right there. Made that higher high and then hit that reverse level, went to bright red and came above right here. And then what did it do? It ranged out again all day. It was disgusting the entire day. It was just ugly. It was in a range. But while it was flowing, it was a thing of beauty on the 1 minute. Actually, tons of entries in here on the 1 minute. It was kind of cool. Now, there's one thing in here that I want to show you guys, okay, that you can avoid deeper pullbacks. If you want to avoid the deeper pullbacks, I want you to look at this trade right here. This trade, I'm going to turn yellow, and I'm going to make, there's actually one right here as well, that we're going to turn yellow. What do you guys notice about those two yellow arrow entries? What is the cautionary tale here? What do you notice? What do you guys notice about it? Yep, two things happened here. The trade before it failed to make a higher high on both accounts. Right here, failed to make a higher high. Right here, failed to make a higher high. And the candle closes over the line on the 1 minute. That's the difference. When that happened, pullback happened here. When that happened here, market went sideways. So it indicated we were either about to go sideways or have a deeper pullback. So if you're in the market, this is why I'm saying if you get in when the candle crosses over the line, when it's bright blue and you get in when it crosses over, if the candle closes below, you just get out. You're in and out on the same exact candle on the 1 minute. You're in and out on the same exact candle on the 1 minute. No delay. Every single other entry, 1, 2, 3, 4, 5, 6, 7, 8 entries. This one ended up closing below actually, so we're gonna mark that one yellow as well. 1, 2, 3, 4, 5, 6. 6 of those totally valid winning trades. 3 of them because it closes over right here, right here, and right here. You just get out. Very, very, very minimal loss on the 1 minute. Let me see some diamond fists in chat, if you guys see how much sense that makes. All it did was it closed over on the 1 minute. That's it. During the run, it closed over the line. Just like this one right here. This one also closed over the line. Just like that. Okay, so if you take these trades on the 1 minute, you know right away if it gives you the wick, you're solid. If it closes over it, you're out. It's very simple, very cut and dry. All right, love it. It will apply the vast majority of the time. When you're in a run and the market is moving, it's going to wick. When it closes over it on the 1 minute, you're typically going sideways or pulling back because you've lost momentum. Okay? "15-second is not that way. 15-second is not that way. By the way, if you now come down to the 15-second, you can see where these moves are in the market in comparison. Okay? Here was the exit right here on that same candle. Right here was the dip below. Right here was a dip below. Here was a no touch. Here's what happened after, once it closed below. Now on the 15-second, you wouldn't know that. You don't see it. Over here, dip below, comes down in, stays valid. Comes down in, stays valid. Comes down in, below your line, stays valid. So that's why on the 15-second, your entry is never, ever, ever above the easy money line. Always below it. Always below the easy money line. Always looking for wicks at those levels. When it comes down and it gives you these wicks, that's where you're looking to get in on the wicks. Okay? Same thing, these dips. That's where the market is going. All right. Excellent. Guys, it's that simple. It's that simple. I don't want to overcomplicate it for you. It's very, very simple. If you want, we can look at a couple more days. Let's go over it on the 1 minute. 1 minute is so easy because you don't have to have a premium trading view. Okay, you don't have to have a premium trading view. You can have a just generic, regular trading view. All right, Thursday, let's go over it right here. Entry. Entry. Bright red crosses over the easy money line. That's money. Same thing right here. Crosses over, money. Okay. This one closes above right here. There's your loss right there. And you can see it's also changing color, which is a big no-no, right? Now, we don't have anything in here. This one happened very suddenly. This was like a news candle right here. That happened very quickly. Same with this one. That happened very quickly. So there wasn't really any entries in there. If you look, there was these closed below, so you wouldn't be doing anything in here. If you did take this, which would be not smart, because look how flat this line is here. This is not a move that's moving and pulling back. This is just something that crossed up over the flat line. That's not a trade. Okay, it's just simply not a trade. Here we're lacking color, so we're actually not bright red. We have no color on that one. It's a deeper, bigger move in the market. No color, no color, no color. Here we have color. This one we have color, and this one looks like it closes right at the line or right below the line. And you can see what the result is in the market after that. It just goes sideways, right? So on this particular day, on Wednesday, you had 2 wins, and then you had nothing. I mean, this is just nothing in here. There's nothing in here as far as your momentum strategy goes. There's just nothing. You did have an entry. I can't tell how far below this one pushed. This one is really close. You might have gotten in on this one if you were quick. If not, you didn't get it. This closed below. This one actually was fine, and then the next one closed below. So you're basically out at your entry level right there. So on this particular day in the market, there's really nothing. You might have had some entries over here, nothing. You can see it just goes into this blah all day long. It's really just trash. But it started out with 2 wins. Get your 2 wins and you're done. This is why you don't continue to trade all throughout the day. Get your bag and be done. Very simple. We're just catching that initial market momentum. Here on Tuesday, we have couple interesting things happen because you don't really have color right here and it's closing over anyways. You probably would not be taking this trade. If you took this one here, you took a loss. If it was, because this one does look like it was bright red up until this candle here that came. So if once you got in right in here, it pushes up a little bit, closes, you're just out. You're not bright blue here. So there's nothing until it gets back over here. And again, the market just goes sideways. So you have another blah day. That's at 11:02. So just nothing really going on in the market on the 1 minute on that day. On the 15-second, though, we did pretty good. Did pretty good on the 15-second. All right, let's see what we have here. On this particular day, we have a move in the market right here. How many ticks did this move? Let's come back here. This is 120 ticks. That's a massive move in the market. It's a big one. Nothing in here, nothing in here. On the 1 minute, nothing really in here. This one right here is a potential candle that you would have entered in on. If you look, it's pretty much bright blue. This one comes to it. This one crosses below. You're going to be in and out on that candle until the market starts flowing again. There is an entry candle right here that crosses the line, touches it right here. I'm not even going to mark this one because it's so close to the line. I'm guessing people are not going to be entering that one. I'm guessing they're not going to be hitting that one. We also have our pivot levels here. You can see these are moving off the pivot levels. But for what I'm teaching you right now in the 1 minute, as far as the simplest strategy, you're not really worried about those. So market continues to the upside, and from here, no real great trades, but you were one and done on this one anyways. This one trade right here on the 1 minute is a lot of ticks. It's over 100 ticks in the market. That is a huge, huge move. Huge move in the market if you caught it. Okay, and then we'll take a look at over here, and then we'll look at a couple on the 15 seconds, okay? All right, here on Monday, no trade here, and no trade here. This is off color. We're not quite where we want to be on the PSI either. Nothing, but then it does give a trade to the upside. Right here, we cross below while we're bright blue. That's beautiful. And it does it again right here. Boom, that's beautiful. Same thing, it comes back to the same level again, and this one does close below and then continue, but it's at that same level. But once it closes below, you're not taking it as far as what I'm teaching right this moment. Right here, it continues up, crosses below right there, and you do get another trade to the upside. No trade right here. Right here, this comes back to it and does give the wick. And so right here, depending if you were quick and you caught this, you would have been able to get in right there for a nice drop. Okay. So you can see these are all examples. This is already on to last Friday, so that just gives you guys an example of those 1 minute bright colors, crosses over the easy money line, take your entry. This is the easy 1 minute strategy to do with Pathfinder. Okay? Again, I'm teaching you basic chocolate, all right? Very simple, nothing too complicated. You can see the pivots as well here at these levels where it's doing this. But you can keep it super simple in that. All right. That covers both of them. We're coming into 947 right now. Coming into 947 right now. And you guys saw a little bit of both. We showed you the 15 seconds. It is similar but different. Similar but different in that you are looking at those a little bit deeper pullback levels. So it's not just when it touches the easy money line. It's when it pulls back a little bit deeper past the easy money line, right? The easy money line is your reference for like, hey, I don't ever enter above it on the 15 seconds. I wait until I'm below it for the buys, right? If you wait until the pivots, you can also take the pivots. You want to wait for FVGs if you can, if you get those fair value gaps. Again, that's a bonus. And if you can get 2 or 3 of those things all at once, you've got yourself a great entry, a high probability trade. And remember, guys, this is all about probabilities. Trading is all about probabilities. It's all about doing your best to keep emotion out of it, staying objective, and just functioning within your edge over and over and over and over again on your edge. Just focus on honing your edge and your strategy, knowing simple exits, simple stop loss levels, like you know where you want to get out, you know where you're looking to take the market to, and you understand the behavior, and you're sticking to, again, bright candle colors is the simplest way to do this with Pathfinder. Whether you're on the 15 second or the 1 minute, this covers both of them. All right. Excellent. Which one, Alyssa, were you talking about that it covered over? You could absolutely have the 15 second and the 1 minute showing. I know I've done that where I've split screened it several days. There was one of them that closed over. Yeah, if it closes over, there was one that it closed over and then it continued. It just barely invalidated that level. Remember, your line is your easy money line is a zone. It's not like it doesn't actually exist on the chart. Do you know what I mean? Like it's genuinely an imaginary line that is there based on data and historical data and statistics and research and all that. Like I built the line. I put it in there. The market doesn't know that line is there. Right? You guys know what I'm saying? Like they don't know. The line is a reference line to help you to have an edge, and it's based on statistical probability. Statistical probability and relative strength and moving averages in the market. Exactly. It's a cloud, a zone, or not a hard concrete thing. Now, if it barely closes over it, that is different than if you get a big candle that closes over it. For example, let's go to the 1 minute. Okay? This candle barely closes over. Now, obviously, the market does do this, right? And you should probably have a stop right here just in case so you don't have to lose all this ground, right? But that's very different than, let's find one where it like clearly, this right here, clearly closes over the line. Clearly. It's a clear violation, okay? Versus even this one, barely closes over the line. If it goes higher, I'm out. Right? Barely closes over. If it goes lower, I'm out. Because we shouldn't. We should be moving from that level to continuous if we have strength and momentum. Otherwise, we're in a different type of trade and a different type of movement. So that's it. All right. That's going to conclude everything I'm going to teach you guys tonight. Again, this is just the basics. I just want to cover basic strategy of 1 minute time frame and 15-second time frame. The 1 minute is going to be maybe a little bit more challenging for people in the fact that you have to be a little bit more patient. You have to be a little bit more patient for those crossovers of the easy money line while you have bright candles. Okay. So you have to be a little bit more patient. And when it happens, you need to execute. Without hesitation, you need to execute. And you might only get 1 or 2 trades in that time frame of from 9:30 until 11 a.m. This one gave 1, 2, 3, 4, 5, 6 trades before 11, but some days it was 1 or 2. And the majority of the time it wasn't anything in between that, right? So you're going to get less trades on the 1 minute. You'll get more trades on the 15-second, more entries, and be able to scalp and get in and out of the market quicker. And I just want you guys to remember, like, get your bag, don't be greedy, make hay while the sun is shining, and like trade while the trades are there. And if they're not there, don't trade. Preserving capital is the name of the game. It's not about how much you can make. You can have many winning days in a row and then give it all back in one day. Don't do that. Okay? Know when to walk away, know yourself, and know how to be disciplined in order to be able to preserve your capital. All right? Solidly closed over it with no wick. Yeah, then you would not want to. You would be out immediately on that candle. You'd be out immediately. If it closes over it solidly with no wick, on the 1 minute, you're out. On the 15-second, not so, because the 15-second is going to have those deeper pullbacks. All right. This video was recorded. I will be getting this uploaded and posted onto that post. I've already got the pictures posted on there, so you guys can see those. And feel free to go back in time and watch it again. And I'll also get it posted in the classroom. All right. I will be back on tomorrow morning at 9 a.m. We will go over strategy again, and then we will tomorrow we'll do the split screen, so I'll have the dual screens going. So you guys will be able to see both 1 minute and 15-second, and we'll see what we can do in the market to finish out strong. Friday's typically a trap day. It can be challenging, and so we're going to look to just get our bag and be done in 1 or 2 trades. So I will see you guys tomorrow at 9 a.m. Have an amazing evening. Thanks for joining me. We'll see you guys tomorrow.